Hey, what's going on, team? It's Ricky with Techwood Solutions, and I wanted to host this like private boot camp. So there should be about less than 100 of you that actually watch this video. I know that right now we're gonna be we're going live right now. So I'm gonna give it a couple seconds for everyone to be able to get all tuned in. So the way that this thing is going to go, this is the first time I've ever hosted this. I've never done this before. And you kind of wanted to test it out to see if it would be of value for our beginner traders. Hopefully, this little boot camp can be like a little spark or a little catalyst to kind of guide you in the right direction and really build that foundation in which you can build off of. This is not just for like Learn Plan Profit members. This is for both Techwood Solutions and LPP members. I know that when I host, the live trading sessions within LPP, there's a huge focus on just me trading. And one of the things that I wanted to, kind of just express or focus a little bit more on, at least today, is the importance of these 10 series of like best practices or like focuses that I wanted to talk about and cover today. So I hope that you guys enjoyed this video. I'm going to be sharing my screen in just a little bit just so you guys can see exactly what it is that I am talking about. So I'm going to pop out the chat real quick just so I can see everything that's going on. So I'm going to say what's up to everyone. If you are tuning in live, again, it's a very small group. So please do me the biggest favor and just be, involved. That's all I really ask is, if you're tuning in, even if you just want to like say hello and stuff like that, I want to see kind of like who it is that we have tuning into this boot camp. And to make sure that, again, the only way that I can help you out is to make sure that I know that you're there. So what's going on, Christian? What's going on, Sanjan? What's going on, Cold Rose? Trippy DL? Taylor? What is going on? Yeah, I have a stuffy nose. Can you guys hear it? Yeah, so what's going on, Paolo? What is going on? Albert, Gary, Rutib, right? B. John, Michael, what's going on? Lee, Andrea, David, what is it? Fasil, TT, Yatun, what's going on? Jason, Matt and Shell, Dima, Scott, Private Pair, what is going on? Ronald, Sandra, there we go. Recklessness, Benjamin. Nice. Well, what's going on, everyone? So I could see that you guys, you guys could see the little chat right here on my right-hand side, probably your left-hand side. But I'm going to start sharing my screen. And one of the first things that I wanted to cover is I think it's super important, especially, again, this is going to be really for my trading style, is, technical trading, right? So trading based off of patterns and performing technical analysis. So I wanted to kind of ask you, so let's do kind of like a Q&A kind of thing. I wanted to ask you, when it comes down to the technical aspect and performing a technical analysis, are there any of you that kind of still struggle with that? So let's kind of hear it. And again, this is a closed group. This is not something that's going to go public. So this is where you want to ask those questions. When it comes down to performing a technical analysis, being able to identify a pattern, is that something that some of you guys struggle with? And if so, what would you say is your biggest struggle? So looking at the 180-day chart, right? Is it easy for you to be able to, identify a pattern that, just depending, I guess, what it is that you are covering, right? So for ticker symbol COKE, right? On the 180-day chart, you can see that's a 180-day analysis. You can see that it peaked out, it's sold off. As of right now, isn't it just looking for setting up trend patterns and waiting for confirmation? I mean, in the aspect of setting up trend patterns, yeah. But those three patterns that I wanted to talk about today. Ascending uptrend patterns, which are, uptrend patterns. So very similar to COKE. So they continuously make higher highs and higher lows and offer a very consistent uptrend. Usually, again, if you guys want to take note of this, usually ascending uptrend patterns make it a little bit easier for you to be able to enter and exit effectively and actually come out on top and actually make a profit because the overall direction and pattern is in your favor, right? So if something continuously makes higher highs, even if your entry point as a beginner isn't the best, usually, again, based off previous patterns, it will most likely, if you give it time, recover and then actually end up making higher highs. So one of the things that you still want to focus on is getting in for a good deal, making sure that you wait for confirmation and that you're taking a position not when it's selling off, but when it's actually uptrend. There's those core principles in the sense that you still want to talk about. But definitely did want to talk about, I think this is kind of like one of my favorite patterns, especially for beginners. But I know that we have a lot of beginners that also really do like horizontal patterns. How many of you guys prefer horizontal patterns over ascending uptrend patterns? How many of you? So how many of you guys prefer something that offers a horizontal pattern rather than an uptrend pattern? It makes it that much easier for you to identify your entries and your exits. So ascending scares me. All right, Chris. So I love horizontal patterns. I like hearing that. So we have Albert saying not me. There we go. I prefer uptrend patterns ascending. Okay, so I like that. I like that, you guys are opinionated, and that's really good. How can you have an opinion? How can you have a real opinion when you actually understand what we're talking about, right? So for all those people that just comment for whatever the case may be, those aren't relevant opinions. You guys are saying that, no, I prefer ascending uptrend patterns, or no, I actually do prefer horizontal patterns. That's based off of your experience and based off of your knowledge. So, thumbs up for that. One of the ones that I wanted to talk about is, as of right now, I wouldn't even really view this as a horizontal pattern, but this is ticker symbol NRG. It was showing signs of an uptrend pattern from this area, right? So from this point to this point, it was making higher highs and higher lows, but now it's sold off, right? What is it that you guys see here? So based off of, if we were to identify this as a horizontal pattern, there's no confirmation just yet, but if we were to identify this as a horizontal pattern, what would we see? Right, based off previous support levels, right around $36. It already broke below 36. We're at 35.58, and that's why confirmation is so important, right? Look at the RSI; it's extremely oversold. Look at the MACD, right? It makes sense on why it can bounce here, and patterns do tend to repeat themselves. But guess what? They definitely don't have to, and that's one of the things that a lot of people, I guess, just don't understand is that they think that when something is near or close to a support, that automatically they're just going to buy here because they want to get the best deal possible, and then they hope that it goes up. But if it breaks its pattern or never actually bounces, then it will simply continue to sell off. So that's why, again, it's super important to identify a pattern in which you see value in, but to make sure that confirmation is key in every pattern, right? Regardless if it's ascending, horizontal, and even descending pattern. Now let's go ahead and talk about, let's see, what's a descending pattern? See if we can pop one up. So that's Shopify. That's an ascending uptrend pattern. Okay, so ticker symbol Tesla. Ticker symbol Tesla has been making lower lows and lower highs. This is what a descending pattern, looks like. Now, for all of our beginner traders, I want you guys to kind of engage with me right here. For all of our beginner traders, why might it not be the best idea to take a position on descending patterns? What are the three biggest mistakes that beginner traders usually make? They trade based off other people's opinion. They trade lower cap stocks and usual stocks that don't really offer overall uptrends. And then altogether, if that day trade doesn't play out according to plan, how many of you guys have ever done this? If your day trade doesn't play out according to plan and you don't want to use your day trade because of the PDT rule, you end up bag holding it and hope that it recovers the next day. How many of you guys have ever done that? So bag holding. I know I've done that, right? And definitely it's not a pretty thing. You end up not wanting to hold it because you're only down 1% and you're just like, I'll just hold this and it'll recover tomorrow. And then it opens 5 or 10% below what it closed at, right? Like, how unfortunate is that? But if you would have taken a step back and would have looked at the 180-day chart or just larger time frames, you would have seen that the direction or the overall pattern is a descending pattern. The direction is descending. So that's a direct correlation of the effect it's going to have on your trading account. So that's the easiest way for me to put it is, if I'm asking you, right, why are you trading in the stock market? So if I were to ask you, what pattern would you want your account to resemble? Ascending, horizontal, or descending? There's a lot of you guys. There's a lot of you guys that are trading descending patterns. And next time you take your position, just ask yourself, hey, did I look at the 180-day chart and do I understand the pattern that it offers? Right? Do I understand the pattern that it offers? And then you take a step back and you see it's a descending pattern and you want to hold that specific stock. Again, I'm not saying you can't make money off of descending patterns. You 100% can, just like with Tesla, right? You buy the dip, but it's so difficult to identify when the very bottom is. And it's much easier once you get that confirmation and begins to average up, and then you just lock in profits right away when it begins to become a little bit overbought. And even then, sometimes it doesn't push up as high as it did before. So there's always a layer of risk, another layer of risk added to a descending pattern because the overall direction is not in your favor. So next time that you take a position, all I ask you to ask yourself is, am I okay with the 180 day chart pattern of the stock that I'm about to invest in and hold? Next time you plan on swing trading something, next time you plan on holding something, ask yourself, am I okay for my overall account to resemble what this resembles, right? So do I want my account to look like this, where it makes lower lows and lower highs? No, because that means that I'm losing money. And that's the exact opposite of my intentions. So why are you holding stocks, right, if they don't play out according to plan? Especially if it's not even ascending or not even growing, right? Why would you even bother holding it? Just very simple little things like this. Very simple little things as in just asking yourself these series of questions, and regardless of the monetary aspect, right? That you are so focused on just trading quality patterns and understanding that whatever it is that you are taking a position on is there to grow your account. And if you're day trading something and it's showing signs of an uptrend within the day, then great. If you're swing trading something and it's showing signs of an uptrend within the series of days, then great. But if you trade something and the day trade doesn't go according to plan and you plan on holding that, and then you take a look at the 180-day chart and you see it's a lower low, lower high, and right now it's selling off, you are putting yourself in that position where you are going to lose money. And that's something that you have to be aware of. Make sure that every action that you take in the market is something that you understand and are aware of. And if you're aware of something, regardless of the monetary aspect, yes, I understand it might suck that you missed out on the PDT rule, or you have to, use another day trade. But guess what's going to suck a lot more? If you open 10, 20, 30, 40, 50% down on the day that follows, I never want to trade again because you just discouraged yourself. But it's not because you couldn't do it. It's because you weren't disciplined, right? So that's one of the first things that I wanted to talk about, right? We talked about ascending uptrend patterns, horizontal patterns, and descending patterns. I think it's super important for you to understand, these different patterns, the directions in which they're going, and why it's so important that if you plan on day trading something, that it's solely focused as a day trade. If you plan on swing trading something, that for that to be your intention. And again, this is something that's going to take practice. This is something that's going to take time for you to be able to have a better understanding of. But I just wanted to make sure that that's something that we covered today. Now, the next thing that you get that we're going to talk about is direction, right? I think ultimately keeping trading, especially day trading, super simple. I would say the direction of a stock is one of the single most important things that I focus on when it comes down to trading. I'm being completely honest. Yes, I love these indicators. I love all that. I love patterns. But direction itself, if I partake when all the action is happening of that uptrend direction, of something showing signs of an uptrend and the direction is pushing up, if I can partake in that, yes, I want to focus on getting in for a good deal. So there's still a list of criteria that I want to make sure that I meet. Making sure that the margin of profit is worth it, that I understand the pattern, all that good stuff, right? But I want to make sure that the direction is in my favor. So when it comes down to, same thing with day trading, same thing with swing trading. Right now, Tesla, trading in between the middle and bottom VWAP for all my Learn Plan Profit members here, just like we've explained in the course. We know that the middle and bottom VWAP, when it trades in between that, it's making it's showing signs of it making lower lows and lower highs. It's not showing any signs of an uptrend pattern, right? So the direction is descending. So that is a huge red flag on why I would want to stay away. Now, when it comes down to something showing signs of an uptrend pattern, right? So let's try to find something that pushed up. Friday was not the best day for the overall market, right? So let's try to see if we can find something. Let's see. Holy smokes. None of these are good. These all resemble pretty much the same pattern. It's because the market didn't do too well. Let's see. Holy moly. Isn't that crazy? How many? We'll use this as an example, even though it's not the best example. If you guys get what I mean, right? So on the 1 day, 1 minute chart, right? This thing is trading between the middle view up and top view up. The overall direction is in our favor, making it that much easier. If we're seeing that there's this, we talked about patterns and we talked about direction. Now, if we identify this pattern of it trading between the middle and top view up, right? The middle and top, not the middle and bottom. So we know that it's showing signs of an uptrend. It's making higher highs and higher lows throughout the entire day. So we have to give it time. One of the things that I think a lot of people make the mistake on is that they think that because the market opens at 6:30 in my time, or whenever the market opens for you, that you have to take a position at that time because that's when all the action is happening. Who cares what everyone else says? Who cares when everyone else is trading? You only partake in the action when you identify a pattern in which that you see value in. So if you need to give it 2 or 3 hours for it to identify its direction, for it to identify its pattern, for you to be able to analyze that pattern to justify that this is for a good deal and I could sell it for a profit, then so be it. Why do I have such a strong focus on analyzing futures when it comes down to trading things like UGAS, DGAS, UWT, DWT? Why? Because I can analyze the futures, right? Which don't just open at market open, and they don't have low volume. Futures trade for much longer than normal ETFs and stocks do. Therefore, it makes it that much easier for me to identify a pattern and direction on the future, which then I can correlate on over to the ETF. How many of you guys knew that? I solely trade based off of patterns and direction. And if I can analyze that pattern and direction on the future that's been trading, right, all night, instead of looking at the ETF that literally just has a couple candles or they're all over the place because there's very low volume, I could focus on the future and try to analyze, on /NG, right? On /NG, since it trades for much longer, and it trades for much longer before market opens, and it trades for much longer after the market opens. So this is something that you guys all have to be aware of. Why do I have such a strong focus on that? Because I want to analyze the patterns in which I can then decide, is this something that I want to partake in? Because I understand that this is either uptrending or descending. So that's why I find it to be so important. Okay, so I just want to make sure, like, you guys might always have been wondering, why does he always pay so much attention to futures? Like, what does that have to do? If you've ever watched me trade live within the Learn Plan Profit group, you guys all would have noticed that I'm literally on my right-hand screen. I always have the future of whatever ETF it is that I'm trading because that's what's most important. Why? Not because I care about the future, right? Not because I care about /NG, but it's because of the analysis, the direction, the pattern in which I can actually see. And during pre-market hours, when something is trading during pre-market hours and this is all I have to go off of, this one on DGAS, a lot more action happened on Friday, but it normally doesn't even perform this way, right? So let's say for JNUG, if I have all this to go off of, it pushed up and then pushed down. What the heck is that? But guess what? If I have /GC, right? /GC, and I can analyze all this, market opened right around this general area, right? This general area, 6:30 my time, right? But I have all this to analyze. And even I could go further back, the market closed, so it only lets me do 24 hours. But on the 1 day, 1 minute chart, when the market opens, I can go even further back. And this is much more data, much more patterns in which I can analyze. So when the market does open, I don't just have, this to go off of. What the heck is this? I don't know. It pushed up and then pushed down. What is that? I don't know which way it's going. But one thing that I can focus on is on /GC. It was pushing up and then it began to make lower lows. It traded between the middle and bottom view up and then it began to aggressively sell off. So now I understand the direction. I understand the pattern. I understand that /GC has been selling off, and that means that JNUG will most likely sell off as well, and that JDST, the inverse ETF, as /GC and JNUG sells off, then that will push up, right? So that is why it's so important. Again, I have a huge focus on ETFs and futures. A lot of you guys might not. So what does that mean? There's no future for Tesla. There's no future for Facebook. So what do you need to do if you're struggling to identify its pattern and direction, right? We're focusing on direction right now. So if you're struggling to identify the direction of whatever it is that you are trading, what do you need to do? If you're a technical trader and trade based off of, analysis, what do you need to do? I'm asking you guys. What do you need to do if you are trading something like a normal stock, as in Tesla, Facebook, AMD, Amazon? What do you need to do? You have to wait. Right? You have to give it time. You have to give it time for it to identify its direction, right? So if I'm trading Coke, and how was I supposed to know that this thing was going to push up and then push down? Yeah, you can look at previous patterns and you can make an analysis based off of that, because again, previous patterns do tend to repeat themselves. But if again you're focusing on a day trade, then maybe you might want to give it a little bit more time, right? How much easier would it have been for you, right, on Tesla, if for all those that tried to take a position on it when it tried to push up and then push down and all this, right? If you would have just let it, kind of play out for about 1 to 2 hours, and then would have realized that, hey, this thing is selling off, it's trading between the middle and bottom VWAP, and it's not showing signs of an uptrend. I don't want to take part of this. But guess what? You just had to give it time. Time for you to be able to perform a proper technical analysis. How do you perform a proper technical analysis? Based off of, patterns. And if there's no patterns in which you can analyze, then you can't perform a proper technical analysis. So you can't identify its direction. But just a quick and simple little reminder that, yes, it's great to trade when all the action is happening, as in like when the market opens or right when the market's about to close. I agree that generally there is a lot of action that happens within the first 15 to 30 minutes of the market opening and about the 30 minutes before the market closes, or 1 hour, the power hour, right? Who cares? Who cares what everyone else says? Who cares when everyone else is trading? Do you feel comfortable with the direction? Are you clear on that? And are you clear with the overall pattern? If you're not, then who cares when everyone else and what everyone else is doing? Give it time, right? So what if you swing trade? Well, if you swing trade, then you want to look at larger time frames. It's the same thing. You trade based off of patterns, and patterns tend to repeat themselves, but you still need patterns to identify its direction, identify its pattern, and the margin of profit. So what do? Then you look at larger time frames, right? You look at larger time frames, and then you try to understand within general areas of low points and high points. Again, this is a descending pattern, so this was a little bit different. But when it's a good time to get a good deal, waiting for confirmation, and then once you get that confirmation, then slowly adding more to your position size as it confirms that. And then once it becomes overbought or any indication of a resistance, then guess what, right? Based off previous patterns, you can perform an analysis, and you can see like, how many of you guys remember when I performed a technical analysis on Tesla and everyone was like, no, I think Tesla's going to push right back up to 300. I don't care what everyone else thinks. I can see that this is a descending pattern. It's been getting rejected by this SMA line, and it makes sense. Patterns tend to repeat themselves, and they don't have to, and I agree on that. But until I get that confirmation that they're not going to repeat themselves, or that they do repeat themselves, then I don't care what everyone else says. Anyone can make assumptions or share their opinions about anything. That's even me. I'm preaching this to you, right? Even for those that are part of Learn, Plan, Profit, for those that are just part of TechBud Solutions. The only way that you got this link is if you're part of either one of those. I don't care which group you're a part of. You should never trade based off of my opinion. If I'm trading something, who cares? That shouldn't empower you that, okay, I'm going to trade what Ricky trades. No, why not? You don't understand the pattern, and you don't understand the direction and the values that I see on that specific stock. What if right after I close out the live stream for Learn, Plan, Profit, I'm just like, crap, there's a break of pattern, I didn't see that, and I have to cut losses. And then I cut losses right away, but guess what? What if I don't share that right away within the Discord chat because I'm catching up on other work? And you end up continuing to hold and hold and hold and hold. But you would not think yourself that there's anything going on or something is wrong because you first initially didn't even understand what was going on or why you even took that position. So again, let's just make sure that moving forward, that we give it time to perform the way that we give it time for it to identify its pattern and its direction, and that we feel comfortable and confident to be able to take advantage of that opportunity because we see its value. All right. Now the next one that I'm going to be talking about is margin of profit. How many of you guys have ever taken a position due to FOMO, which is the fear of missing out? I want to get a show of hands. So Ricky legit treats us like that. Let's get on Joshua Lim. So how many of you guys have ever taken a position based off of FOMO, the fear of missing out? So someone is either talking about a stock that, even for me, right? Even if I'm talking about a stock and you're like, holy crap, Ricky's about to trade this, I'm going to trade it because of FOMO, right? Or someone's sharing it within like stock twits or the group chat of like, hey, you can't miss out on the stock. Or how many of you guys are just like, wow, this thing is really pushing up into momentum stock and it just continues to push up and I'm going to get in, right? FOMO, the fear of missing out. How many of you guys have ever done that? I have. I'm not here to say I'm an exception to that. I've done that multiple times. I've even done that this year. 100%. I probably did it last week. Because I got FOMO, the fear of missing out. It's something that you got to refine over time. But again, there's one of the, what is it that they say? One of the first, I don't know what they say. One of the, I think it has to do more with like addiction, right? Like one of the first steps in addiction is like, is admitting that you're addicted, right? How many of you guys are usually addicted to FOMO? Like, you either sell too early or someone else is trading something, they're making decent amount of money, and then you partake in it. I know that I've been there. I've done that. A very like infamous thing that I do within the Learn Plan Profit live streams is I tend to lock in profits a little bit too early, but that's fine. That's a very good, I want to say, like, issue to have. I can refine that over time, but sometimes I'm just like, dang, this thing's still pushing up, I might want to get back in. But one of the reminders that I ask myself is the margin of profit worth it? Is the margin of profit worth it? So let me ask you this. I'm gonna kind of like ask this question backwards. What is your goal, each one of you? I want a one-worded answer. What is your goal by trading in the stock market? Is it wealth? Is it for your family, right? So you could spend more time with your family. Is it time? So you could spend more time doing what it is that you want, maybe dedicating less time to be at work. Or is it just as a hobby, right? Is it for enjoyment purposes? I know the reason that I got started is, it was for the monetary aspect as well, as in like I found it to be a very lucrative, business or market. But I also was very intrigued by it, right? So like learning about the market, family and time, wealth, passive income, okay, consistent profits as a hobby, financial freedom, hobby investment. I like that. I like goals and statistics. How many problem solvers do we have here? How many people are empowered by solving problems? I think that's one of the most beautiful things about this market is that, first of all, you never stop learning, you're never the best, and the market's always changing. So you're always going to have to solve these problems. And I like that, right? That's something that truly, it keeps this fresh. I literally look at numbers and charts and patterns and candles all day. How boring is that? But when I solve, in a sense, a problem of like something is selling off, right? Something is selling off, it's consolidating. We've talked about this, the 3 stages of a reversal. It consolidates and then it pushes up, so we get that confirmation, and then I begin to add to my position size, and then it begins to push up. It begins to indicate signs of an uptrend, and then it becomes overbought, overextended. I can see that with the indicators. I can see that with its consolidation. So then I lock in profits, and I successfully, traded that. And if there's a problem that I encounter, as in like, wow, it's not performing the way that I expected it to, or I wanted to sell at, 340, but if there's a resistance at 320, that's a problem, right? So what do? I lock in profits because I understand that there's a reason behind me locking in those profits. So one of the things that I wanted to ask you guys is, you guys have all these different goals, all these different intentions on why you began trading in the market, right? So now that you know, each one of you, a lot of you guys said your family. I think that's beautiful. I think a lot of you guys said time, learning purposes, passive income, financial freedom. All of you guys have your motives, right, for trading in the stock market. So what I'm going to leave you with, and this is a very simple little thing, margin of profit. How does that correlate on over to your goals? Okay, so we talked about FOMO and all that stuff, right? So on your next trade, we all know about patterns, and we all know the importance of direction. Now I want to make sure that every single time that you take your trade, that the margin of profit is worth the risk. That it's not because someone else is telling you to trade, but that the margin of profit is worth the trade. That it's worth the day trade, right? As in, like, if you have 3 because you're under the PD2 rule, that it's worth it. Be someone of quality. Focus on quality trades. Do it for your family. Do it for financial freedom. Do it for the time. Do it for learning purposes. If you really want to master this and slowly but surely refine that strategy, then you want to make sure that every action that you take is then working towards your motive. Every action that you take right now, this boot camp is designed for beginners. I know not everyone. I sent the link out to a couple people that are definitely not beginners, and you guys, are aware of that. But one of the things that you want to make sure that you do is that your actions today align with your goals. If you are bag holding, if you are trading based off other people's opinion, if you are not managing your risk, these are things that you have to write down. If you are not managing your risk, if you are not cutting losses and keeping your losses smaller than your profits, if you are not waiting for confirmation, none of your actions that you are taking, that you are all aware of, that I repeat in every single freaking video that I upload on YouTube, none of the actions that you are implementing into your trading are actually working towards your goal. So trading isn't about being super smart. Trading isn't about, having an edge on the market. I agree. It's much easier when you find your niche. For me, it's ETFs. I'm able to identify futures and ETFs, and I do really well with that. That's my little edge or niche. Great, I found it. And that's something that I've always empowered people to do. I don't care if you trade ETFs. I don't care if you trade momentum stocks. I don't care if you trade OTC stocks, Fortune 500 companies, blue chip stocks. It really doesn't matter to me. Find your niche and dedicate time to find that. Something that you resonate well with. We're all wired in different ways, and that's why I'm not here to tell you exactly how to trade. But once you find that, and once you identify what works for you, now you need to make sure that every single action that you take is then again working towards your greater good. Not even for yourself, right? But for those that you are doing it for. Your family, time, financial freedom, learning purposes, right? We all have our motives. So every single time that you take your trade, regardless if you want to put it next to where it is that you trade, regardless if you want to put it, next to your computer, put a little note there. Because if you can't do it for yourself, then at least, hopefully, then you can do it for those that you are working for, right? As in, I know a lot of you guys have families. I know a lot of you guys have loved ones. And I know that can be a huge motivator for you to be a little bit more disciplined, for you to be a little bit more structured with your trading. And again, I'm no exception to this. There's a lot of times that I should have cut losses, but I didn't, right? Last week, I had a 1.8K loss. How many of you guys remember that, right? I believe it was Tuesday or Wednesday. 1,800. I believe it was Wednesday. $1,800. 1.8%, right? I could have done a much better job cutting my losses on that. I did an amazing job last week focusing and making sure that every pattern and every trade that I took advantage of, that I tried the direction to be in my favor. And one of the only times that I did not do that was on Wednesday when natural gas was selling off and I continued to try to find the bottom. I'm sharing this based off of my experience so you don't have to have the same extreme loss. $1,800 I lost because I tried to find the bottom on something that was selling off. I was so stubborn, and again, I wasn't focusing on my criteria. Trading in my eyes is honestly super simple. Find your niche, which takes time, which takes practice. So it's something that you're going to have to dedicate time to. Once you find that, if you focus on direction, understanding the patterns, confirmation, and making sure that every time at any indication of a resistance, of a support, that there's a reason for everything that you do. So if there's like a resistance, and remember when I did that blind trading challenge that I didn't focus on my P&L? How many of you guys have ever done that where you don't focus on how much you're up or how much you're down on your position and you solely trade based off of the patterns? Whoa. Why would anyone do that? Why would anyone trade solely based off patterns and not how much they're up or they're down? Let me remind you, this might be a tough pill to swallow, but just like myself, your entry point and your exit point and how much money you want to make is completely irrelevant to the stock market. How much money I want to make, how much money or where I bought, no one cares. The market has, they don't care. What's important when I'm trading? The patterns, the direction, right? Support, resistance. And if I see that there's a sign of a resistance, how many of you guys have ever done this? And I've done this multiple times. The mistake that I've made is that, I buy at a certain price point because I try to buy the dip. It sells off, it begins to recover, and it's about 10 to 15 cents lower than where I originally bought at, but it's so close that I'm just selling myself that, hey, it's going to get so close, it's already so close, I'm only down a little bit, I'm just going to wait for it to get to where I bought at, and then I'll sell there or maybe a little bit higher. But then guess what? The RSI is already super overextended. The MACD is overbought already. And then it's showing signs of consolidation and at a resistance, already 10 to 15 cents lower than where you bought at. But you're so stubborn because you're so focused on where you bought at that you don't sell that position. But there's obvious indication that you should sell. But guess what? You don't. But what if you did? Right? How many times have you been put in that situation where you don't sell and then it consolidates, it begins to sell off, and then now you're down and now you're in the red, and not just a little bit, but now you're like, wow, I should have sold at that price point. But why? Because there was a reason behind that trade. If you guys have never tried that before, where you don't focus about your entry points, you don't focus like where you bought or where you sold, but you focus and make sure that every action that you take when it comes down to buying, adding to your position, and selling and locking in profits or cutting losses, all has to do with the pattern. That's a crazy kind of like mentality to have, is it? It's up to you. It's up to you guys to decide. But you just want to make sure that, again, the margin of profit is worth it, right? So I'm gonna wrap this up just so we focus on this. I didn't cover everything it is that I wanted to, but maybe we'll host another boot camp next week. But I have to grab some breakfast. So one of the things that I wanted to talk about is that all these different factors, all these different like criteria that we try to focus on, right? As in, what criteria am I talking about? We talked about it, right? Patterns, directions, and opportunity cost, the margin of profit, all this thing. Managing risk, planning out your trade. How many of you guys have ever posted something in the ticker call out format and you structured your trade, everything like, you waited for something to sell off, you waited for it to consolidate, you took a small position of that, it began to indicate signs of an uptrend, you added more to your position, and then all of a sudden it just sells off. And you're just like, what the heck? What did I do wrong? You didn't do anything wrong. It just did not play out according to plan. And it's a tough pill to swallow because you're just like, wow, like, I really can't get the hang of this. No, you just have to understand that that's part of the game. And that's why it's always so important to have that plan B, that stop loss, that risk management. Because let's say you shoot your shot 5 times. And every single time that you shoot your shot, you make sure that the margin of profit is 3 to 5%. But every single time you cut your losses at 1%, you can cut your losses 3 times. And even if one trade out of those 4, right? Out of 4 trades, let's say 3 don't go according to plan. Even if that one trade goes according to plan, you're back at that break even. How? With structure. If every trade that you try to take a position on, and think about this, it's a numbers game. If every position, and be real with yourself and be honest, don't sell it to yourself, but just be honest. If the direction is in your favor, everything has to align. Direction, the confirmation, all that stuff, and the margin of profit. So every position that you take advantage of that has a 3 to 5% margin of profit and that you cut your losses at 1% every single time. You wait for confirmation and you wait for the overall direction to be in your favor. You still want to focus on that. Yes, you can take 3 losses, but on the 4th one, if you focus on that structure and on that discipline, only 1 out of those 4, 25% success rate, needs to go according to plan for you to break even. How many of you guys are not at the break even, right? Why? Because you don't stick to your plan when it comes down to cutting losses, or you don't focus on that kind of like what we call within the Learn Plan Profit group. What do we call it? So for all those that are part of Learn Plan Profit, what do we call that ratio, right? What do we call it when we make sure that there's a 5% margin of profit for every 1% loss? How many of my Learn Plan Profit members do we have here? What do we call that? I want to see if you guys get it. There we go. The golden ratio. Yeah, the risk/reward. You guys can call it whatever you guys want. I just try to share this like creative name for it so it sticks. What is the golden ratio? I shared an example of a 5% margin of profit for a 1% loss. I need you guys to know that that is an example. That's a template. Some of you guys might be a little bit more conservative and be like, no, I want there to be a 10% margin of profit for a 1% loss. Great. Let that be your golden ratio. Some of you guys that are a little bit more risk it for the biscuit might have a 3-to-1. Who cares? I'm not here to tell you what your golden ratio should be. All I want you guys to know is that how important it is. Get that ingrained in your head. That all the criteria, all the planning, all that still has to be met, right? This golden ratio is for, number purposes. As in, when you shoot your shot 4 times, 3 can fail, but only that 1 time, even if it plays out according to plan, you'll still break even. So hopefully you have a higher success rate than 25%, right? But it makes sense because you can continuously grow your account or at least break even while you're learning. One of the last things that I want to leave you guys with, and I really talked about it in yesterday's video. How many of you guys, so we have about 60 of you, right? Or 50 of you tuning into this video. How many of you guys watched yesterday's video? I just want a yes or no. I like that, Jimmy. So how many of you guys watched yesterday's video? Oh, Christian, I'm going to boot you out of this. Oh, Robert, you too. Get out of here. Jay Fisher, get out of here. Jimmy, get out of here. Benjamins, get out of here. James, just kidding. All right. So one of the things that I talked about is, and this is what I'm going to leave you guys with, right? So just please stay with me. One of the things that I covered in that video is how important it is for you to understand your position right now. What do I mean by that? We have so many people that are just getting started, and by just getting started, I mean a year or 6 months, and their experience level is not great, but their mentality of how they're trading is for, income purposes. That just doesn't make sense to me. One of the things that I talked about in yesterday's video is how I was able to scale up my trading to be able to make $2,000 a day like I did last week. What do I mean by that? I gained my experience and I built up my capital and my confidence and my experience to feel comfortable trading with $100,000. And because of my experience and because of the consistency factor, I was able to make $2,000 a day or $10,000 in 5 days of trading. But how did I get there? One of the biggest mistakes, and this is what I'm going to leave you guys with, one of the biggest mistakes with the mindset that I see a lot of people make, not just in trading in the stock market, but this is pursuing any creative market that's not just a normal job. Even some normal jobs, right? But normal jobs are guaranteed a wage and it's a little bit different. But one of the biggest mistakes that I see people make is that when they begin to learn about a new market, they're so obsessed and they're so sold that they're going to start making money right away that they start trading to make money for income purposes. one of the things for mindset purposes that I would encourage you to kind of maybe adjust, and again, this is just a suggestion, so for those that see value in it, great, is as a beginner, your trading account and your trading should be for learning purposes. Meaning that if you're trading with $1,000 because you think paper trading is too fake and it's not real enough for you, I don't care if you're paper trading, I don't care if you're trading with $1,000, that you're doing it not for the profits, but that you're doing it to learn. Why is that so important? I lost my butt when I first started trading because I focused on penny stocks. I didn't know what it was that I was doing. I was trading based off other people's opinion. I was trying to trade pump and dumps just like everyone else, and I did not do well. But one of the things that I began to figure out is, I had my stable income. I was working my telecommunications sales-based job. I was going to school full-time. I had a huge passion for trading in the stock market because of how interesting I found it. And one of the things that I understood about myself and maybe why I saw that I ended up being successful in the stock market was my approach. I didn't need trading to supplement my income. And what do I mean by that? I didn't need trading to work out for me at that time that I was just getting started. It wasn't a make it or break it for me because I already was doing something else on the side, as in my normal job, that provided me that stability. So when it came down to taking on the market, I was so focused on just learning that my trading account, when I was paper trading, was for learning purposes. And when I began to trade with real money, when I made that transition from fake money to real money, when I proved to myself that I could break even and that I could slowly grow my account, that I wasn't doing it like if I made $100 or $50, great. But it wasn't anything that like I took out of my account and then funded into my bank account to pay my bills. It was still for learning purposes. Why is that so important? And this won't make sense to all of you, but for those that it does, just think about it a little bit. Even if I just have you for a second, think about it. Why is that so important? The approach. When you're so obsessed about trying to make, in the monetary aspect, money, you begin to become emotional, you begin to make mistakes. And you're so sold on the idea that like, I'm here to make money right now. And unfortunately, again, in the very beginning, there's such a learning curve and such a low success rate that if you're really doing it for the monetary aspect, you will most likely fail. You will most likely get discouraged and you will most likely never want to do this again. But if you do this for learning purposes and you learn how to grow your account, if you truly learn how to become a self-sufficient and independent trader, meaning that you don't need to trade based off other people's opinion, that you're aware of what it is that you're doing based off your experience, which is going to take time, then what can you do? You can then begin to scale your trading. And what does that mean? The amount of money, the reason I find this to be so important is the amount of money. Ask yourself, the amount of money that you are trading with right now is not what you could be trading with 5 or 10 years down the road. Do you all agree? I just want an answer, right? Do you all agree that the amount of money that you are trading with right now is not what you can be trading with 5 or 10 years down the road, right? So why are you trying to make it or break it right now? You won't get to 5 or 10 years down the road if you're going to discourage yourself. But why is that so important? If you truly want to scale your trading or scale your business or in every market, and this is why I said that it's not just trading in the stock market. If you truly want to scale what it is that you are doing, the only way that you are going to get there is if you're focused on what actually matters. So when it comes down to building confidence and building experience, you will understand what it is that you're doing and you will be empowered to trade with a larger dollar amount. Ask yourself this. You guys watch my trading. For all those that are part of One Plan Profit, some of you guys watch my recap videos on YouTube, at least I hope, right? How many of you guys, I don't trade for other people and I never will, right? So there's a bunch of fake accounts that always say, reach out to you. First, please know that that's all fake. I never reach out to you. I never ask for money. I never, I don't offer anything like that. So I don't want you guys to get that intention or get that idea. But how many of you guys would, with my experience and my track record, feel much more comfortable to trade with a larger dollar amount. So if you had my experience and my knowledge of the stock market, would you be trading with more money compared to yourself right now? Would you feel more comfortable trading with more money? Of course, it's a simple thing, right? With more experience and with a more consistent track record, it makes sense. What's the difference between you and I right now? Simply experience, and that takes time. That's all. That's all. The knowledge that I've gained from my experience in the stock market is what helped me build this kind of like knowledge and consistency aspect that now I feel empowered to trade with more money. And I knew that I was doing something right, that when I was trading with $15,000 to $25,000 and I was consistently profitable, and I had people on YouTube ask me, Ricky, why aren't you trading with $100,000? Why aren't you trading with $500,000 if you're so consistent? Because I don't feel like I'm there yet. And I think that's such a beautiful thing where everyone sees how consistent I am, that they're just like, you should be trading with more. That empowers me. It makes me feel like I'm doing something right because I am slowly but surely, as I want to make sure that when I continue to increase the dollar amount that I trade with, that it's a no-brainer. That it's not just like, yeah, I've been really consistent, I think I'm going to try it out. No, but that it's like, yeah, it's way overdue, that it's time for me to scale up. I'm not here to trade for anybody else. I'm not here to prove myself to anybody. I'm here to continuously just, I enjoy the whole process. Honestly, there's no excuse. Like, it's great to, like, the $10,000 that profit that I made last week. That's great. But even if it was like, $3,000, $2,000, $1,000, $1,000 a week, $4,000 a month, right? $48,000 a year. If you would have told me that when I was 14, that I could trade from the stock market and make $50,000 a year, I would have been sold on that. I think that's a beautiful thing. I have the luxury of time. I have the luxury to do whatever it is that I want, and $50,000 a year, I think that's amazing. Obviously, as I scaled up my trading, now I can trade with more, and now I can make a little bit more, right? But it starts with that simple idea that I'm truly just fascinated by the stock market. So this is what I'm going to leave you guys with. It's, if you guys think that, like, wow, I really don't have this passion for the stock market, I would still try it out, paper trade practice, see if it's something that, really works well with you. And if not, then guess what? You don't have to. I'm not here to tell you, hey, the stock market is for you. Nothing like that. You guys know that I've never been one-sided on what's going to lead to your success. One of the things that I do want to empower you by, or empower you to do, is to pursue whatever it is that you see value in and that you have a passion for. One of the most beautiful things that I've noticed about, like, what it is that I do is that I don't need a vacation from my work. And I don't think that's something that anybody can, that just anyone can say. If you have a job and you love what it is that you do, and I love using this example, but my dad is a handyman. He lays down tile. A lot of people hate that stuff. I hate it. I could not do that. But guess what? That's something that he had a huge passion for. It didn't make sense to me. Why? I don't know. He's a little crazy, right? My ex-girlfriend. I love using this example too. Amazing young woman, and she wanted to be a teacher for kids with special needs. In the monetary aspect, it's not very rewarding, right? It's a lot of work, but she loved it, and that's good. So if you have a job that you love, great. I love that. I would, like, if you found your calling, 100% continue to pursue that. I don't care what anyone else does. If you love going to school, if you love going to college, what everyone, like, Wi-Fi money or so-called entrepreneur college dropout, that's all BS. Who cares what everyone else says? It's all social media stuff. It doesn't matter. What does matter is if you see value in what it is that you do, and that you don't necessarily need a vacation from it. Yeah, it's cool to take a trip with the guys from time to time. I mean, we're young, and yeah, it's cool to see different parts of, the United States or the world. But guess what? I don't need to do that. I don't really care for it. I do it more for, like, I don't know, I gotta post stuff on social media, and it makes me look kind of cool. Other than that, you guys know what it is that I like to do. I like Chipotle, I like Canes, I like my cars, and I like trading. And that's what I feel like is my calling. And I'm not here to make it sound a little bit more interesting than it actually is, but I'm here just to share with you guys that like I think that's one of the most amazing things about what it is that I do, and it's that I truly do enjoy the process, and I don't need a vacation from it because I enjoy it so much. Yeah, sometimes it does get lonely, sometimes it does get boring, but so does everything else. One of the things that I would love to do a little bit more is sleep. That's something that I really enjoy to do. So what's one of my favorite pastimes or hobbies that's not trading? It's sleeping. But yeah, so yeah, I kind of just wanted to leave you guys with that. One of the things that I did want to remind you, if you guys are in this video, feel free to refresh this if you guys tuned in a little early. This is for those that want to. This is the first bootcamp that I ever hosted. First of all, I want to thank you guys again for your time. I really hope that you guys enjoyed it. Feel free to message me on Discord or comment down below what your thoughts were about this and maybe what you would like me to cover if we were to make a follow-up. But one of the things that I wanted to share with you guys is if you're not part of Learn, Plan, Profit already, again, you guys know that that's the private group. Again, it is a course solely focused for beginners. If you scroll all the way down in the description of this video, scroll all the way down, I have a little $50 off coupon for you. It's only active for the first 10 people. Whenever it is that you're ready, if you feel ready, $50 off. It's a one-time fee. You'll get to watch me trade live every single day, and you get access to the Learn, Plan, Profit lesson library for a lifetime and all the updates that follow. We have that private group chat, and again, that's the group that I work with every single day. So if you like kind of the information that you gained from this video, then I'm sure it's something that you would see a value. So again, all it is that you have to do is you have to go here. Can you not look so ugly, Ricky? You just go to the description of this video, right? So you go to the description, you scroll all the way down, and there's a $50 off LPP link. So feel free to check that out. Again, it's for the first 10 people, for all those that want to partake in that. I wanted to ask you, before we close it out, so a Q&A portion would be nice. That's what I'm going to be doing right now. So for the next 5 to 10 minutes, open-ended questions that you can't Google, feel free to ask me right now. So for those that don't have any questions, happy Sunday. I'll see you for our Sunday stock talk. Dang it, I just realized I missed my Sunday service. Dang it. Okay, my parents are going to be mad. Thanks, man. These smaller groups are more personal than having hundreds of people and all that. Yeah, I agree. I had a lot of fun. It was really cool seeing that like smaller number of just like around 60 to 70 people within this live stream. And I felt like the environment was good. It allows me to answer and really focus on your questions. So cool. So how do you find good potential stocks? So we kind of talked about it in this video, right? Where we talked about patterns, where we talked about direction, where we talked about the margin of profit. So it really comes down to like every stock, I don't scan for stocks anymore. Every stock that I find is either through the TechBook Solutions or Learn, Plan, Profit chat. And it doesn't mean that you have to limit yourself to those resources, but I literally just go to either the watch list section within TechBook Solutions or the group alert section within LPP, and I just go through all the stocks that everyone is talking about, and I build up my watch list. So like you guys saw, if you guys go to my TD Ameritrade, I have all these different watch lists that I built for myself, and they're all sectioned off based off of different criteria. This general watch list literally has so many stocks that literally I just add to the list and I remove them as time goes on. And we have the pullback watch list and all these different things. So I would just say, and it's not an easy way to do it, but for you to be able to go through all those series of like stocks that everyone is breaking down, and it will help you, refine your technical analysis, and it will help you better understand how other people see value based off of their tickers call out format, and give you a better understanding of why it is that they see value, and then you get to kind of test yourself and be like, do I agree with that or do I not? And then you can set a list of, so I would make sure that before you even start looking for stocks, that you have an opinion of like criteria that every stock has to be. It has to be showing signs of an uptrend, or it has to, offer a certain margin of profit or something like that, that as you're adding stocks to your watch list, that you kind of go through that routine. So what's a good percentage growth goal to aim for per week? That's a very opinionated question. I'm not here to tell you what to aim for. For myself, I think that if you're aiming, I think I don't like to limit people, right? But I think if you could grow your account, even if you're just getting started, honestly, if you're just getting started, and you can grow your account 1 to 3% on a weekly basis, you're doing an amazing job. I doing much better than when I first got started. So just to put it into perspective, you'll probably do much better than me in a much shorter period of time. So I would just focus on, again, it's really hard. And I agree on this. It's very hard to feel like you're doing something good when you're aiming for 1 to 3%, but there's people that are making 50, 100% like a week. I can understand how that can be like kind of discouraging. Again, slow and steady wins the race. For all those that might be making 50 or 100% in a week, they might be losing 40 to 50% the next week. It comes down to the idea of, you know, risk it for the biscuit. And unfortunately, those that approach the market very aggressively don't last a very long period of time. So ignore the noise, focus on yourself, and just find something that you feel comfortable with, but that also empowers you to maybe push yourself a little bit more. So find that kind of middle ground. Question: is there a balance with trend following indicators? So I don't use all those series of indicators. Yeah, James, feel free to direct message me on Discord. I use a series, I think 2 of those 4 indicators that you talked about. But yeah, and I have videos on those on YouTube as well. Since Robinhood is unavailable in Europe and Thinkorswim has a $6 fee for every transaction, is it viable to trade with $1,000, or is the 1.2% fee to sell and buy too much as an amount? So I would honestly say that well, first of all, I think there's an application called Webull for those that are outside of the United States that I think gets free commission as well. So feel free to check that out. On top of that, I would, to gain your experience, again, $1,000 is great if you're already growing your account, but if you're already questioning that, then you might want to ask yourself, like, are you even growing your account? Do you have the experience? And if not, maybe offer or approach it with a simulation or paper trading platform. If you have to pay fees, just factor that. Yeah, you can do that. So can you call TD Ameritrade and lower your commissions? Oh, you can call, and that was a suggestion. Yeah. You're talking about my calendar. Best way to convince loved ones it's a good idea to deposit more money uh, in market accounts. I don't know too much about that. I would just say, like, let your success. I think there's this like quote, right, that like revenge is the best success, or success is the best revenge. Holy moly, I am tired. But yeah, ultimately, I just think it comes down to your track record. If you can continuously grow your account and you want to show people that, hey, this isn't a bad idea and you might want to look a little bit more into this, just show them. You're not here, I wouldn't say, like, I'm never here to convince anybody. When my family members ask me about trading, I'm never like, yeah, you should do it, or yeah, it's great for you. I'm always just like, yeah, try it out. Get your feet wet, start paper trading, and see if it works well for you. I have a bunch of videos on YouTube that you can learn from, and if you want a little bit more of my assistance, we have LPP. Feel free to enroll. Ricky, would you use SureTrader as a new trader? I've heard good things and bad things about SureTrader, so I don't know too much about that. Did you use a trading journal at first? No, but I did take a lot of. I guess that kind of is a trading journal, huh? Trading journal just seems so official. I kind of have a trading journal now. Look at this. What do you guys think about this? Look at my little trading journal. Ooh, we have these on Tech with Apparel. You guys need to copy a little trading journal. We have some that say like learn plan profit or profit or something like that. That's sweet little plug, right? I believe it starts. Well, it does continue every morning, Chris. So like the VWAP indicator, yeah. So it is something that you can use every single morning, and it does like recalibrate during pre-market hours and stuff like that. So, what do you do for saving to pay your tax bill? It's different. We're all in different tax brackets, and my tax bracket might be different than yours, right? So I would just speak to a tax specialist. You can literally call people like H&R Block, TurboTax, all those different like institutions for tax purposes, and kind of go off of that. So, will you autograph it? And if so, I'll buy one. I don't think so, but yeah, maybe once we have some at the Technical Solutions headquarters, you can buy another one there, and I'll sign that one for you. So how do you find entry and exit points for day trading and swing trading? So it comes back to answering and asking that question backwards. We talked about patterns, we talked about direction, and we talked about margin of profits, and making sure that every entry and exit that we take is based off of, a reason for, an indicator or indication. So how do you identify an entry or an exit point? Where it comes down to your analysis, the pattern that you identify, the low points, the high points, when it has that confirmation, when you add more to your position size, and then once it begins to consolidate or based off previous resistance, and you can see that it's beginning to, with the indicators as in the MACD, the RSI, or it's just beginning to consolidate, then it's showing you signs of, hey, you should probably sell. Then that's when you can decide to lock in profits. So again, there's not an exact answer of like, this is where you buy and this is where you sell. You have to understand patterns, you have to understand directions, you have to understand the aspect of getting something for a good deal, waiting for a confirmation, averaging up and selling when you either based off previous patterns see a resistance, or at any indication of a resistance or consolidation, you lock in profits at that. So how could we look at how could we look for a specific confirmation? Consolidation indicators based off previous patterns, previous resistance levels, and stuff like that. Support levels and resistance levels, just to answer your questions, are only valid once they confirm themselves. So if based off of previous patterns, kind of like the example that we gave for what was it? Was it NRG? I don't think it was. So based off previous patterns, $36 was a support. The only way that right now that it's selling off, like $36 is not confirmed as a support until it bounces at this area and then begins to show signs of an uptrend. So when does this become a support? When it confirms, the bounce. When does, based on previous patterns, there's a resistance here. When does it confirm that this is a resistance? Well, based on previous patterns, you can make that assumption, but once it confirms and gets rejected, then again, that resistance is confirmed. So around this general area, yes, it's overbought, and around this general area, yes, it tends to be oversold, but it doesn't mean that it has to bounce there. So let's just make sure that we have that idea in mind. So I'm just so appreciative for all I'm learning. Oh, appreciate that. Thank you. Since you follow futures, do you also pay attention to VIX? No, not too often. I don't trade. I think VIX has to do with what is it, S&P 500? No, yeah, this isn't something that I cover. Ricky, you are a genius when it comes down to the stock market. I wish. I wish. And like I said, again, it's not that you have to be smart. It's not that you have to be anything special. So I'm going to close out the video here. One of the most important things that I've learned from the market and all these different markets is, yes, you have to have an understanding of what it is that you're doing to have an opinion, to be able to make rational investment decisions, 100%. But once you have a general understanding of the concept of buying something for a good deal, being able to sell it for a profit and all that stuff, focusing on direction, focusing on understanding how to read patterns, confirmation, and averaging up and selling at any indication of resistance, literally, that's all I do. If you guys watch any of my videos, any of my recaps, any of my live tradings within LPP, for all those that are enrolling in Learn Plan Profit today and watch me trade live Monday through Friday, you will see that it's the very simple things that I implement that a lot of people struggle doing. Just like, why do people spend more money than they have? It just doesn't make sense, but so many people do it. I think altogether, one of the things that I've learned, and I learned this at a very early age, and thankfully, it I think guided me in the right direction, is I just saw that the average person tends to overlook the very small things that unfortunately ends up setting them back, as in like saving money, not spending money that you don't have, and altogether just doing what it is that you have to stay afloat, and then doing different things on the side if you want to be a little bit more creative to get ahead of the curve. That's all I've done, since I was like 12, 14, around there, and thankfully I am where it is that I am now, but it's not because I'm any smarter or any better than any of you, but it's just because I'm consistent, I'm self-driven, and I understand kind of like the small things really do matter. So again, guys, if you guys want to enroll, feel free to scroll all the way down in the description. There's a $50 off coupon for you. You guys are more than welcome to check out what the Learn Plan Profit group is all about. That's going to be that first link in the description to see kind of like what's included in LPP. We talked about it, live trading, lifetime access to the course, and also that private group chat. So thank you guys again for your time. I really do appreciate it. Hope you guys have an amazing rest of your Sunday. We'll see you for our Sunday stock talk. And like always, let's make sure that we end the year on a green note. Take it easy, team.